Hello and welcome to RAEX Europe update. Today I will present you the highlights from our latest revision of the ratings of China. On the rating committee held on the 16th of November 2017, we decided to downgrade the SGC rating to A+ and confirm the CCE rating at A+. The downgrade was mainly due to the constant increase in leverage of the economy and deteriorating fiscal metrics. The main threat to the country's creditworthiness remains the high leverage in the economy. We project the overall aggregate finance to the real economy to end the year at around 216% of GDP, 7 percentage points higher than in 2016. Moreover, even though the growth on trust and entrusted loans halted in mid-2017 as authorities' efforts to curb this have so far succeeded, it remains a risk for the financial system. However, the banking sector remains stable and well capitalized in their official metrics. The fiscal deficit keeps widening, and according to recent IMF projections, it will stand at around 3.7% of GDP in 2017, similar to the figure posted in 2016, but we also anticipate further widening in the long-term perspective. After a 6.7% growth of real GDP in 2016, we can expect the Chinese economy to end 2017 with a similar growth rate, above the initial authorities' forecast of 6.5%. This, following the fiscal and monetary stimulus, which resulted in solid infrastructure and real estate investments. Going forward, however, we anticipate a slowdown on the yearly growth rates as a result of the government's rebalancing efforts. Moreover, the share of the tertiary sector in the economy keeps increasing. The external position continues to be very solid. In 2017, exports and imports have continued to grow as compared to last year. Even though controls on the flow of capital have eased, these are still in place and have supported the reduction of official outflows from the country. Moreover, international reserves continue to increase, reaching a record high in September 2017, when they stood at $3.2 trillion, continuing with the upward trend since January 2017. At the same time, there was a rapid appreciation of the yuan during the year, following the country's strong economic fundamentals. Despite the stabilization of the state-owned enterprises' debt and further reforms regarding the ownership structure and concentration, SOEs still represent a key source of contingent liabilities risk for the Chinese economy. These types of companies remain highly leveraged and with low profitability, which is shown by the low amount of profit paid to the fiscal budget. Despite the government having clearly stated that it will not support any LGFV defaults, the agency still considers LGFVs as a potential contingent liabilities risk, considering that the debt through these financial vehicles keeps increasing, and it is not certain whether or not the government will intervene in case an elevated number of defaults may occur. Finally, we still consider the amount of government debt to GDP as acceptable. Nonetheless, it continues to increase, and we expect to continue in the same trend going forward. Thank you.